Good afternoon and welcome to this session in our 2025 Yellowbook training series. I'm Rachel Indette with Sikich University and I will be on to support you all today. We also have Rachel Hawley with our marketing team with us. She and I will be screening questions and comments that come through. For CPE today, we will have 3 polls. As they come up during the session, please complete all 3 polls for CPE. If you're joining us via browser, ensure you're set to full screen as these polls can be hidden if your window is minimized. You can expect that CPE certificate in about 5 business days. This recording will also be made available on demand in a few days following the event. An email will be sent to you with that information when it's available. So for this session, we're joined by Anna Cadmus and Brian Smith. Anna is a principal of governmental accounting and consulting services. She has over 10 years of auditing and accounting experience in the local government sector. She provides monthly accounting services to a diverse group of governmental entities, including police, fire, pension funds, municipalities, park districts, and fire districts. She also has experience delivering audit and assurance services to a variety of municipalities, special districts, pension funds, and Illinois state agencies, including compliance testing for federal award programs. Brian has worked in and around local government in various roles for approximately 20 years. He was recently promoted to Director of Finance at the Village of Wheeling after spending 10 years as their Deputy Finance Director. So, without further ado, I want to say thank you to everyone for joining us, and I'll hand it over to Anna.
Awesome. Thank you, Rachel, for that introduction. So as Rachel mentioned, this is session 3 of our Government Yellowbook series, and we're going to be discussing preparing a management discussion and analysis. The first thing that I want to do is thank Brian Smith, Director of Finance over at Wheeling, for collaborating with me on this presentation. I know he's been extra busy lately and actually just returned from a trip to Italy, so I really thank him for collaborating with me on this. For today's agenda, you can see it here on the screen. I'm going to focus on more of the technical details behind the MD&A, especially with GASB 103. And then Brian's going to follow up with more examples on how he approaches MD&A preparation. So just bear with me as I get through more of the technical side of things, like the purpose of the MD&A, GASB Statement 103, and the key components for the MD&A under that statement. And then Brian will touch on things like timeliness of preparation, sources of information, and best practices. So what is the purpose of the MD&A? What value are you adding to the users of the financial statements? Some of you may look at the MD&A and think, is this really worth me preparing? Under GASB, the purpose of the MD&A is defined as a way to provide an objective and easily readable analysis of your government's financial activities based on currently known facts, decisions, or conditions. So a couple items to point out there. The first is going to be easily readable. This should be written in a manner that can be understood by users who may not have detailed knowledge of governmental accounting. So most of you on this call, many of you probably do have some knowledge or some really detailed knowledge of governmental accounting, but you need to think about those who don't. Within the basis of conclusions for GASB 103, the board does note that the intent of this requirement to present the MD&A in an easily understandable manner is not to include educational information or to define terms. Instead, the intent of the requirement is to ensure that the MD&A is written in plain language and avoids accounting-specific terms that only more sophisticated users may be familiar with. So you don't need to feel like you need to teach the reader everything about governmental accounting because, as you know, that would take quite a bit of time. But just make sure that you're using more of that plain language as you do write your discussion. The analysis within the MD&A should be fact-based, and it should discuss activities that have both a significant positive and significant negative impact on your government's balances and results of operations in comparison to the prior year. So for most of us, discussing the positives is pretty easy, right? It's fun to sit down and write the things that went well year over year. But you need to make sure you're also looking at the negatives and writing an honest discussion with your users about what happened for your financials during the year, even if there was some negative impact there. The MD&A is an opportunity for you to present both short-term and long-term analyses of your governmental activities. So as you know, in the financial statements, most of it is as of a point in time. Your balance sheet is as of a certain date and the activity is for the year prior. But this is an opportunity for you to present some more of a long-term story about your government's financial condition. And if there is one thing that you take away from this presentation, you should make sure that you know that the MD&A should explain why balances and results of operations changed when compared to the prior year. It's no longer sufficient to just indicate that the balances changed, the numbers, the percentage of change. GASB really wants you to focus on the reason why behind those changes. Another purpose of the MD&A is that it is required supplementary information under GASB if you are presenting on the GAAP basis of accounting. So if you think about it, if you're wanting to present in full GASB required information, then you need to make sure you're including the MD&A as part of your financial statements. This is considered by GASB to be essential for placing the financial statements in an appropriate operational, economic, or historical context. And if you do choose not to present the MD&A as part of your financial statements, then your auditors must disclose that in the independent auditor's report if the MD&A is omitted. So just remember that it's RSI. If you do choose not to report it, then you will see that additional paragraph within your auditor's report. One thing to note here, though, is if you are one of those financial statement preparers who doesn't present the MD&A or doesn't present your financial statements on the GAAP basis, then you would want to call this supplementary information instead of including it as required supplementary information. All right, and with that, we are at polling question number 1. So I think Rachel will launch that poll, and just let me know, Rachel, once it's up, and I can go ahead and read through it.
That poll has been launched.
All right, awesome. So the poll here is, how confident are you in your ability to effectively prepare the MD&A in accordance with GASB standards? So specifically here, GASB 103, which I'm going to talk about next, how confident are you in your ability to prepare that MD&A under the new standard? Are you very confident, somewhat confident, neutral, or a little less confident, or not confident at all? So we'll leave that open for a minute or so, and then Rachel, whenever you think we're at a good spot, go ahead and read us the results.
All right, I'll give it another minute. Okay, we're at about 95%, so I will wrap up that poll. So 38% are somewhat confident, 26% are very confident, then we have neutral, less confident with 10%, and not confident at all with 3%.
Gotcha. Well, it's good to hear that most of you on this call do feel some confidence in your ability to prepare the MD&A. And to be honest, with GASB 103, which I'll go through next, while there are some changes, if you're already feeling confident in the MD&A you're preparing, then I think that you're going to continue to feel that way when you implement this new standard. So GASB statement number 103, what is changing and why? I'm guessing everyone on this call, including myself, asks that question every time GASB releases a new standard. So to dive into that a little bit, GASB Statement 103 was issued by GASB in April of 2024, and the intent was to improve key components of the financial reporting model. So I want to point out that the MD&A is only part of this statement. Other areas within 103 include unusual or infrequent items, presentation of proprietary fund statements, major component unit information, and budgetary comparison information. So some of you may be aware with GASB 103 that the original exposure draft back in 2020 also included some pretty significant changes to the governmental funds, but GASB did remove that for now. So I think we can all be thankful for that. And I will go ahead and let our firm GASB experts dive more into the other changes throughout 103 and in the next Yellowbook series next month. And I'm just going to go ahead and focus on the MD&A side of things. So the changes with 103 were intended to do a few things. GASB wanted to improve the quality of the analysis that's being presented, enhance the relevance of information that you're providing to your users, and it also aims to provide clarity regarding what information preparers should include within the MD&A. This statement is effective for fiscal years beginning after June 15th, 2025, but earlier application is encouraged. I would just note that if you do plan to early implement, if you feel like, hey, I can get this MD&A thing down, make sure that you're understanding that you'll need to early implement all parts of GASB 103. So make sure you're talking with your audit team and going through those other changes that may need to take place if you decide to early implement. So what did change with 103? When the MD&A was originally added to GASB's financial reporting model, it was under GASB Statement No. 34, which was issued in June of 1999. So it's been a while since any changes have taken place to the MD&A guidance under GASB. The overall purpose that I just discussed within the MD&A is not really changing. There's just much more of a focus on why. As I mentioned, the why is really what GASB wants you to focus on while you're preparing your MD&A and explaining your variances. It's not sufficient just to say, here's the numbers that change and here's the percentages, even though as accountants, I know most of us can come to those pretty easily. So you want to make sure that it's important for you to first understand the why in order to help your users understand that. And I'm going to let Brian later on in this presentation go through some resources you can use to help gain that understanding so that you can relay it to your users of your financial statements. Another item emphasized within 103 is the idea that you should avoid unnecessary duplication while writing your MD&A. While there may be certain explanations relevant to multiple components of the MD&A, which I'll go through next, it's up to your professional judgment whether or not you feel the need to, re-explain those in multiple places, or if it makes sense to just refer back to those other areas where you've already provided that explanation to remove some of that duplication. The original exposure draft that GASB released did state that explanations should not be repeated after they've been presented initially. But based on responses to that draft, GASB did make the change to leave this up to your professional judgment. I think that's really important because it allows you to make sure that the MD&A stays in an easily readable format. I think if you were forced to not add any additional explanations more than once, that it may become a little bit of a constantly referring to other pages throughout the discussion. So make sure you use your professional judgment as far as duplicating information goes. And finally, the other change under GASB 103 is that it establishes 5 sections of presentation of information. So we will dive into each of those components now. In general, Statement 103 includes more general requirements rather than specific terms to emphasize that preparers should include explanations that are most relevant to the information presented each year and really avoid boilerplate discussion. So some of you may prepare your MD&A by kind of rolling forward last year and seeing, updating a few things, but keeping a lot of the information the same. And that's really not what GASB wants you to do anymore. However, you should make sure that the information you are presenting is confined to these 5 components. You have your overview of your financial statements, your financial summary, your detailed analyses, your significant capital asset and long-term debt financing activities, and your currently known facts, decisions, or conditions. So I'm going to dive into each of these in more detail. But one thing I wanted to point out here, that if you have prepared a number of MD&As, you might notice the thing that's missing is that GASB number 34 previously required a discussion of significant variances between original and final budget. It also asks you to discuss any differences between final budget and actual amounts presented in your financials. GASB believes that these are the same variances that are often presented elsewhere within your financial statements. And so GASB 103 specifies that budget and actual analysis should actually be included as notes to the required supplementary information so that that analysis is in a place that's closer to where those variances are presented within the financials. It's no longer appropriate to discuss budgetary variance information in the MD&A because your MD&A should focus on your basic financial statements, which are generally not presented and are no longer actually able to be presented with 103 within the basic financial statements for your budgetary information. So now we'll dive into each of the components within the MD&A that is under GASB 103. So component number 1 of 5 is the overview of the financial statements. The goal here is to provide an overview of the basic financial statements and their relationships to each other. You should also focus on significant differences in the types of information provided. For example, identifying differences between your governmental, business type, and component unit activities, as well as the purpose of the various fund financial statements. So think about measurement focus and basis of accounting. As a government finance professional, those are probably pretty basic items to you, but recognizing that the users of the financial statements may not have any idea what the difference between your various financial statements are, it's a good idea to draw a picture of that at the beginning of the MD&A. The fund financial statements, as you know, there can be quite a few throughout the government financial reports. So helping the user understand what those show and why they are different than the government-wide financials is really important to put things in perspective. While doing this, you also want to make sure you're indicating the importance of the notes to the financial statements. So I think we all know that the notes, I think they've continued to grow and probably will continue to grow in our government financial reports. And so some users may think, well, I've looked at the financials, I don't want to read, these 45 pages of notes with them. But I think pushing the user and letting them know how integral those notes are as you write your MD&A is really important. And finally here, you want to make sure that you're using charts or graphs to help your users visualize. A lot of us are visual learners, and this is a good spot to be able to create those charts and graphs to help your users understand how your financial statements relate and differ from one another. And while I mentioned earlier that boilerplate information is discouraged under GASB Statement 103, this is one component of the MD&A that GASB does recognize is probably going to be pretty similar, not only for your government from year to year, but across all types of governments. So don't feel like you should exclude things like this, these explanations, just because they seem boilerplate. You want to make sure you're drawing this picture at the beginning of your MD&A for your users. Here I actually have a graphic that's pulled directly out of GASB 103. So a really good resource and maybe an option for you as you're presenting or preparing your MD&A is to look at a table that would describe your financial statements, which this one does across the top. You can see the governmental funds is in its own kind of section. And then down the side, you'll see that they're describing each of the types of assets and liabilities, revenues, expenses, and deferrals that are presented within each of those funds. At the bottom here, you'll see that there is a note, and it refers the reader directly to the footnote that's going to better explain some of these items within the notes of the financial statements. So feel free to do the same as you prepare your MD&A. If you're talking about capital assets, does it make sense to tell your user, hey, you can go to page 55 of our financial statements and see the detail of the capital asset activity. So make sure you have a good understanding of where those notes are at in your financials and how they relate to your MD&A. All right, the next component required under GASB 103 is your financial summary. So the financial summary should provide condensed financial information from the government-wide financial statements. So I want to make sure you're emphasizing here that this section should only touch on the government-wide. We will talk about the fund financials a little bit later on in the next component. But for now, you're looking at your government-wide variances in both the governmental and business type activities from year to year. So generally, you would present 2 years of information and show those variances. If you are showing comparative statements within your financial report, you do want to make sure that you're picking up 3 years of data here so that you're showing more than what's already included in your financial statements. The focus here in this financial summary section should really be on your primary government only. For most of us who have component units, most governments that do, it's not a really significant part of your overall financial activity. So unless it really is significant, and I would make sure you discuss that with your auditors, then you want to stick to just discussing your primary government throughout your financial summary. But as I mentioned, be sure that you're not putting your governmental and business type activities into one analysis. You want to make sure you're showing those numbers separately. As you're determining what to include in your financial summary, you want to consider the next component of the MD&A, which is going to be your detailed analyses. So you want to present information here that's needed to support that analysis of financial position and results of operation, which you're going to present in the next component. So that might help you narrow it down as you're looking at the various elements that you could include. I have some listed here. You could absolutely go to GASB Statement 103 and see a more comprehensive list of what you could include, but you want to touch on things like total assets and liabilities, making sure you're distinguishing between long-term and other. You have your program revenues and general revenues by major source, your expenses by function, unusual or infrequent items. This is a great place to explain those even further for the financial statement user and help them understand what exactly it means to be an unusual or infrequent item within your financial statements. And then finally, looking at your beginning, change, and ending net position. Moving on, after you've prepared your summary, then you want to start looking more at the detailed analyses of those financial fluctuations. So there are two separate analyses that are required under GASB 103. Again, both of these should be presented for your governmental activities and for your business type activities separately. And the first of those is the analysis of the primary government's financial position and results of operations. So this should summarize significant changes both to your governmental and business type activities when reported in the government-wide financial statements. So just as that summary focused on the government-wide, the first of your detailed analyses is going to do a little bit more digging into those fluctuations and help the user understand why those fluctuations existed from year to year. The second analysis is of fund balance or net position and results of operations in each major fund. So as I mentioned, they are going to ask for some major fund analysis within your MD&A. Luckily, though, the original exposure draft did include a requirement to analyze the non-major funds in the aggregate and was asking preparers to be able to provide the why on those variances as well. But based on responses to that exposure draft, GASB recognized a few things. The first is that, if you as your government feel that a fund is so significant to your governmental activity that it should be presented as major, even if it's not required, then you absolutely have the ability to do so. And by doing that, you would also be required to discuss it within your MD&A. The other item there is, most of you can probably picture, it may be kind of difficult to develop explanations for a number in the aggregate across all of your non-major funds. So I think we can all be thankful that GASB removed that requirement out of the final standard that was issued. And maybe just a reminder that as those statements are issued, it might be a good idea to respond to those drafts since it might help us out in the end. Within the fund financials, you want to make sure you're summarizing significant changes within each major fund and also changes to your major funds. And then you also want to address things like restrictions, commitments, and assignments that affect availability of fund resources for future use. So the everyday reader might look at fund balance and see a number and think, wow, there's all sorts of money that my government has that they could spend. Why aren't they doing that? If you explain to them that, this isn't a special revenue fund and it's restricted for X purpose, then it might help the user understand more of what the availability of your funds are for. There are some key points that you should remember as you're preparing your detailed analyses. The first of those I touched on earlier is really trying to avoid some duplication of information. So later on in the next component, I'm going to discuss requirements for things like capital assets and long-term debt financing activities. And as you think about it, you might think, well, obviously those are probably going to cause fluctuations that I'm explaining in my summary and in my detailed analyses at the fund level. And so feel free, if you have those analyses, to point that towards the next component of your MD&A and let the reader know that they're going to be able to gain more information by going to that next component so that you don't feel like you have to repeat yourself. That doesn't mean your analyses can't touch on certain significant transactions and events with respect to capital assets and long-term debt, but you should leave the bulk of the explanation for that into the next section of the MD&A. As you might guess, the government and business type activities analysis is going to be a little bit more high level and discuss larger picture items. And then when you're looking at your fund analysis, you definitely want to look more at a little bit of a granular level and making sure your users understand what's happening within those funds. I'm going to emphasize again here that your analyses should be providing the reason why the change occurred in addition to the amounts and percentages. You should include facts, decisions, or conditions that the user may not know. So you should keep in mind that most of you probably live in the geographical area where you work and where your financial statements are being prepared, but the users of those financials may live all over the country. So you really want to help paint a picture to those users of what's going on in your community and what's impacting your community. I'm going to let Brian talk a little bit more of where you can gather some of that information later on in this presentation. And then finally, another item to make sure you're including is a discussion of any significant policy changes and economic factors that resulted in the analysis that you're presenting. So obviously, you as a finance team, your governmental boards are probably passing policies throughout the year that may impact the financial results that you're presenting. So make sure that you're bringing those into the discussion. Economic factors, I know right now that can be a little bit overwhelming with everything going on at not only the local, but the state and federal level. But just make sure that you have a good understanding of those factors and how they may be impacting the financials that you're presenting in the MD&A. The fourth component is going to be the capital assets and long-term financing discussion. So within this component of the MD&A, you want to make sure you're including a description of any significant additions and disposals, as well as changes to commitments that you've made for acquisition of capital assets. So maybe you've signed a contract to build a new park in your community, and you're going to expect not only increases in purchases during the year, but maybe in the future as well. So pointing out your reader to those agreements and those contracts that have been signed is going to be helpful for them to really put the differences in that context. You also need to include a description of significant long-term financing activity, including debt and leases. So most of us have already thought about debt. You think about things like notes, bonds, you might think about leases. But with recent GASB standards, we also get to think about things like public-private and public-public partnerships. You need to think about your subscription-based information technology agreements. So how are those impacting the long-term financing activity from year to year and any differences in your financials? You'll refer back to agreements that you may have been entered into during the year, as well as things like changes in credit ratings and changes to debt limitations, since those could have a pretty major impact on how your government can finance in the future. And just like in the detailed analysis, you want to make sure that you are referring back to that analysis where needed so that you're not necessarily duplicating that information. You also want to include any significant policy changes here, as well as any relevant economic factors, like maybe you've implemented a new capital asset plan for the next 5 years. If that's something that you've implemented recently, it might be worth discussing here. The fifth and final component of the MD&A under GASB 103 is the discussion of currently known facts, decisions, or conditions. So here you should be including a description of those facts, decisions, or conditions that are expected to have a significant effect on your financial position or that are expected to produce a significant difference from prior period operations. So as you look at the slide here, the biggest thing is the word significant. So if you sat down today and tried to think of all of the facts, decisions, or conditions that might impact your financials, I'm guessing it could be pretty overwhelming. In Appendix B, the basis of conclusions under GASB 103, GASB did recognize that the currently known facts, decisions, or conditions that come about after the end of your reporting period may result in a large volume of information for the MD&A. So GASB really points out that it's important to set and designate a significance threshold when evaluating the items that you want to include in your discussion. I would say the best approach here would be consider, having a brainstorming session with your finance team, maybe with the city attorney who has more knowledge about state and federal, legislation, and or your department heads who are, doing the day-to-day work, and try to make a list of, anything that anyone can brainstorm at the time. Revisit that list later on and see if there's things that are more significant that you think you should go ahead and include within your MD&A. Finally here, within the currently known facts, decisions, or conditions, I wanted to go ahead and provide some examples of this. These are also within GASB 103 if you need to refer back to them. The first one here is trends in economic and demographic data. So you want to make sure you're touching on things like unemployment rates, local changes in employers either opening or closing, I know I'm located here in Bloomington, Illinois, and a few years back, there was an old Mitsubishi plant that was getting ready, I think, to be demolished, and Rivian bought it. And so that's made a huge impact on the community here in Bloomington. And I'm sure if you guys take a step back, you can think of similar situations in your own communities. You can also look at factors that you've used to develop the subsequent year's budget. So at the point where you're preparing your discussion, you probably already have your budget, subsequent year budget prepared. So look at things that you use to prepare that budget. You know, did you have changes in tax rates or fee amounts increase? Do you have changes in planned spending, and why do you have those changes? You know, are there things like inflation impacting your planned spending, or new labor contracts that are going to increase your wages going out the door? So make sure that you're considering those in this area as well. The point when I bring the budget into play is not to say that you need to discuss that budget and the actual variances. As I mentioned earlier, that's not required, and GASB does no longer want that in the MD&A, but it's definitely a resource that you can use. And then finally here, actions taken by other parties that will have effect on your government, such as new legislation or regulations. So in today's world, I think at the state and the federal level, you know, by the time we get done with this presentation, there's probably something new. So make sure that you're working with, you know, your city attorney, anybody that will have the knowledge that can help you understand how those legislations can impact your government, looking at things like tariffs, changes in the state and federal budgets, and grant funding, and understanding the facts. You definitely don't want to bring any opinions into the MD&A. I know there's a lot out there right now, but really focusing on the facts and the legislation that has passed at this point will be important in helping you narrow down what to discuss here. You may also feel like this kind of sounds like a subsequent event disclosure. GASB does point out in 103 that you do not have to have something that meets the definition of a subsequent event in order to include it in this discussion. So you don't need to tie those two together, although if you do have a subsequent event, it's probably a good idea to discuss that further here. So with that, we are going to jump into our second polling question, and then I will pass this over to Brian Smith to get into a little bit more of the user-friendly details on how to prepare the MD&A when you get around to it. So Rachel, I will let you go ahead and launch this poll.
The poll has been launched.
All right, perfect. So the poll here is a true or false. So the MD&A section is optional and does not need to be included in financial reports prepared according to GASB standards. So is that a true or false statement? We will give it a minute or so. And Rachel, just let me know when you're ready to close the poll.
Will do. I'll give everyone a few more seconds so we can get into that 95% response range. Okay, I will close the poll, and with 86%, we have false.
Perfect. Then yes, those 86% of you are correct. If you are presenting financials in the GAAP basis of accounting, then the MD&A is required under GASB. And if you do choose not to present it, you are able to do so, but your auditor will need to include a disclosure of that within the audit report, letting the reader know that that was excluded. So just keep that in mind if you are on the edge, if you do want to prepare it, that GASB doesn't really see it as optional, so you probably shouldn't either, but we do understand there are some constraints when it comes to preparing the MD&A. So I do have had a few audit clients in the past that chose not to. So okay, with that, then I am going to pass this over to Brian Smith. He will probably have a little bit more of an entertaining section of his presentation for you guys outside of the GASB information. So Brian, I'll pass it over to you.
Thank you, Anna. Yeah, let's not oversell that. I thought you did a great job explaining the MD&A and letting us all know what we have in store for us with GASB 103. So thank you very much for your time. As Anna mentioned, I'm here to discuss the keys to a successful MD&A, and I'll have some thoughts and stories along the way here. But to me, there's three keys: the timeliness of your preparation, the sources of your information, and using the best practices and knowing what kind of items to exclude. But overall, I would just say that, just being prepared and controlling what you can control as you build your MD&A is probably solid advice. So starting with the timeliness of your preparation, go ahead and switch the slide there. One of the first things you want to do is just check out your audit schedule. Your auditors will give that to you at the beginning, at your first meeting with them before preliminary field work. And you'll have an idea of when you need to have the MD&A complete by. So it can be tough to do, but you want to just kind of backwards engineer your timeline there so you kind of know when you should be getting started and when you need to get that first draft to them so that you can be timely with your audit and be done and able to complete your other reporting after the audit's finished. One of the things I do, and I think is a good suggestion, is I kind of prepare for the MD&A all year long. Anna mentioned painting your picture. That's a really great analogy. One that I use a lot here is what's the story this year? What happened? What's important to the reader? So if you're in charge of it, the MD&A is your baby. So that's why I have that cute little slide down there. You want to be prepared before baby comes, right? So every month I do some monthly analytics with the revenues and expenditures here in Wheeling. I do that so that we know everything's ready to issue our monthly board report to our village board. But I also do it because I'm looking for the discrepancies or the variances that are happening all year long so that I'm ready with the explanations when we get there. So I'll touch on that a little bit more in a second. But one of the other things I do is I review all the board meetings. If you're not the finance director, if you're the deputy in your charge of the MD&A, you want to be making sure that you're reviewing all the agendas and the minutes and you're aware of everything that happened in the village. It's a great place to learn about capital projects that have happened, whether that you need to capitalize them or not. It's also a great way to lean into tracking your open purchase orders, which also tell a story for you. I'll let you know what's been significant in the expenditure side during the year. Tying to the financial statements. So another thing that I do ahead of the MD&A is tie out the audit report. I do that by an Excel file that I built that takes our trial balances and spits them into mock financials so that I can tie our numbers to the auditor's numbers. But as a caution, I don't use that file when I'm writing the MD&A because that's to the penny. There's always those dollar differences and roundings that the auditors do that can throw you off. So I make sure that I'm using the final draft report of the MD&A when I write, draft report of the audit before I use when I write the MD&A, because I want to make sure that I'm avoiding a potential dollar off here, dollar off there situation that the auditors have to catch for me to make sure that our MD&A is accurate. Sources of information. So there's a lot of different places that I collect data from throughout the year to make sure that I know that what we're putting out there is accurate. First off, with GASB 103 coming, it's a great idea to keep in mind that GASB is a great reference. They have an illustrative example out there with 103 where you can follow the changes. I think it's a great place to start there. As the next year or two goes on, you can make it a little bit more your own. But when it comes to the specific fund definitions and things like that, you can feel free to take those directly from GASB. And again, use your ACFR. So make sure you're taking your final numbers from the audit report. It's really easy to copy those and turn them into charts and things like that you can use in your MD&A. And you want to make sure that you're tying out. So In addition to all that, there's some external and some internal resources that I use when I'm writing the MD&A. So as an example, this year, the Village of Wheeling, I noticed really early on, I want to say March or April, I started to notice that our ambulance billing numbers were down significantly. So I reached out to the ambulance company, and over the next course of a few months, we figured out that they were actually using the wrong rates. We had provided the updated rates for the year, but they had failed to implement them. So that led to an audit situation where I had to discuss with the auditors what we were going to do about the shortfall and what, because the ambulance billing company was going to go back and rebill it, but it wasn't all going to be there by year end. So that was a story that I needed to tell in the MD&A. So it was a good thing that I reached out because it prevented a loss for the village. When it comes to capital, fixed asset situations, if there's a shortfall in a project or an overage, it can be a good idea to discuss that directly with a construction company or the developers or your engineers in-house. They're a great resource. In addition to that, if your income tax is down or up, any of your state distributed revenues, give them a call. Here in the Village of Wheeling, we share an airport with Prospect Heights that we both own 50% of. And there's some businesses that are in and around that airport. A few of them sell airline fuel. One or two of them even sell airplanes. Every once in a while, I'd say every couple of years or so, we get a month of sales tax that is way higher than we're used to. And generally, that ends up being a plane that somebody purchased. So we'll reach out to the state for those numbers, or sometimes directly to those businesses to see if that's the case. And then we can explain that in the MD&A. One last external source I use is the Illinois Municipal League, the IML. If you're not aware, quarterly they issue a report, a newsletter, and a couple times a year they have some forecasting and some explanations of what's been happening with income tax and use tax and motor fuel tax at the state level. And a lot of times I can pull straight from them and use those explanations to describe my own Wheeling zone issues or shortfalls or gains there. So some internal resources are the capital improvement plan. I go there every year to read the explanations of the capital projects so that I'm familiar with them and so that I know whether they need to be capitalized or not. But it's also a great resource for the MD&A. You can see what the initial expectations of the projects were, and sometimes that helps you understand why a project's over budget or under budget. Maybe they didn't do a piece of what they thought they were initially going to do because it was proved too expensive, or they did more than they intended to because they found something else when they were digging down there. And it's also a great way to find out whether you had any unbudgeted projects that occurred during the year. Reviewing the minutes and the resolutions will tell you that, but you will also find, if you run across something in the ledger and it's not in the CIP, it's a good sign that it wasn't budgeted and it might be something you want to mention. In addition to that, talk to your other departments. Talk to the engineers and our fleet supervisor at least once a month. Check in on the projects, anything extra that's going on, and we also start talking about the next year's budget. But I'm looking for anything they tell me that I can use in the MD&A as well at the end of the year. So at the end of the MD&A, when you're talking about economic factors and subsequent years' budgets and events, there's a number of things that I look at to make sure I have some good explanations in there. One of the first things I look at is the next year's budget. If you're not the finance director, if you're an accountant or an assistant, read the director's letter of transmittal in your budget. Make sure you're aware of what he or she was thinking when they put together the budget, And those are things that you can comment on in the MD&A or mention. The national economy, if there's something big going on, like Anna mentioned, the tariffs, things like that, those are sometimes worth mentioning if they affected the forecasting that you did in your budget. Another thing I look at is our union contracts. Are they intact for next year? Do we know what the rate increases are for their salaries for next year? Sometimes I'll mention that, especially if it's significant or if it's very minor. If they, for some reason, have a 1% for next year, that's maybe something to mention. Likewise, if they're getting 10% increases next year, that's a big effect on the budget, and you'd want to mention that. And then I look at, again, at the capital improvement plan, things like that, and any other major program that you know has been affected in the next year's budget. This year, the Village of Wheeling shuttered its dispatching department, and we outsourced that to Northwest Central Dispatch. So our budget and even our funds changed as a result, because our 911 revenue that was kept in a special revenue fund, we're no longer going to receive. That's going to go to Northwest Central. So we don't need that fund anymore. And that's something that I could potentially mention in the MD&A at the end of this audit. I might have run a little quick there, but
Nope.
Anna, if you're ready to
Yep.
discuss the third polling question.
Yep, no worries, Brian. I think we still have a couple more slides after this, and there are a few questions in the chat that I'll read off and we'll try to get answered here after the presentation's over. So for the third polling question, I think this is launched. So the polling question is, which of the following is not a topic that should be discussed in the MD&A? So we have the overview of the financial statements, the financial summary, budget and actual analysis, significant capital asset and long-term debt financing activity, or currently known facts, decisions, or conditions. So Rachel, just let me know once you feel like we're at a good spot with this one and I can go through the answer.
Okay. I'll give everyone a few more seconds. Okay, I will close the poll. And with 63%, we have budget and actual analysis. With currently known facts, decisions, or conditions in second place with 16%.
Gotcha. So yeah, as I mentioned, it's that budget and actual analysis. So if you've been writing MD&As for years, that's something you are currently including. But under GASB 103, just to expand on that a little bit, the requirement to present budget and actual schedules only as RSI is now going to be included under GASB 103. And with that, GASB really wants you to move your discussion of those fluctuations to notes to the RSI. So this is definitely something new. Probably the biggest change I would say with GASB 103 is moving that discussion. And as I mentioned, that our Yellowbook series session 4, which will be the GASB update part 2, next month, is going to cover that in a little bit more detail. So be sure to jump in on that when you can. So I will toss this back over to you, Brian, to finish us off with best practices.
Yeah, that looks familiar. I remember that slide. Items to avoid. So as Anna mentioned, budget versus actual analysis is no longer going to be part of the MD&A, but that doesn't necessarily mean that those explanations aren't the same as compared to last year's actual numbers. So I think you'll still be able to use your monthly analytics to help craft your story at the end of the year. You just have to be careful about not mentioning budget versus actual directly. Another thing that you want to avoid is anything that's been mentioned already in the letter of transmittal. So something that I used to do when I was the deputy is I would read the director's letter of transmittal. He was usually able to finish a little bit sooner than I was, so then I could read that letter of transmittal. And anytime I saw anything that I was going to mention, I could either point the reader back to the letter of transmittal, or sometimes he would change his letter of transmittal to say there'll be more about this later in the management discussion and analysis. So it's okay to mention it in the sense that we're going to talk about it a little more later, but you want to avoid repeating yourself, whether it's in the letter of transmittal or the notes to the financial statements. Obviously, the notes to the financial statements are a little bit harder, hard fixed. So you're going to want to mention it's in the notes to the financial statements rather than pointing back to the MD&A. But just read through both and make sure that you're not repeating yourself. Stay brief and avoid generic or boilerplate disclosures. I mentioned it's okay to use GASB's definitions of funds and things like that, but you don't want to be giving generic explanations about why ticket revenue's down or things like that. And you don't want to sound like you don't really know what you're talking about by being too vague. Predictions. This is a great one. We're not in the business of predictions. We're in the business of explaining the current conditions and what that could potentially mean next year or as a result of this year. So you never want to say anything you're not 100% sure of that isn't a fact or a decision or a condition that you're aware of. Don't make predictions. It will bite you in the end at some point. I should get some points with the auditors on this one. The SALLY approach. SALLY stands for same as last year. You should never use those words in your MD&A, and you should never repeat the same explanation that you had last year. Sales tax is up because inflation's up. Okay, but there's other explanations. You should dig a little further and find something else. Don't use the same thing as last year. SALLY's not very popular. Unnecessary technical details. I don't want to see you spend 2 pages describing the actuarial reports that you used that caused a change in your government-wide financial statements. Keep it short. Remember that your readers aren't all accountants or finance people. Sometimes it's just a resident trying to figure out what these financials are all about. So try to stay clear of that kind of stuff. I think that's it.
Yeah, I think so, Brian. So thanks for that. We do have a few questions, so I'm just going to get here so you can see both of our bios. If you do have any questions specifically for Brian or I, feel free to reach out to us directly. But I will go ahead and read through a few since we have a couple minutes, read through some of the questions from the audience, and then Brian and I can tackle these. So the first one we have here notes that you only have business type activities in your financial statements. So would you only explain what those activities are? And that's absolutely the case. While I mentioned multiple times that you should be explaining your governmental and your government-wide activities, if you only have business type activities, then that's the only information that you need to present within your MD&A. Another question here was a question about auditors and do they, our auditors don't review the audit or the MD&A and they don't audit it. Is that not the norm? So as far as the auditor's role goes, the auditors are responsible and most auditors will go ahead and review your MD&A for consistency with the financial statements. So, you don't want the MD&A, as Brian mentioned a couple times, you want to make sure you're using your final ACFR to develop the MD&A so that those numbers tie back and forth. And so if you're preparing it and you do miss a change that the audit had, then more than likely your auditors will come back to you and say, hey, we need to update this because it's not consistent with your financial statements. That being said, the auditors don't release an opinion on the MD&A. They don't audit the actual, explanations and information in there. So that doesn't mean that it's a free-for-all by any means. They might point out if something seems extremely unreasonable. But for the most part, just making sure those numbers tick and tie. And the last one here, Brian, feel free to jump in. It's where's the best place to find some examples of how to do the MD&A? I know that as far as, I'm on the audit side of things, but when looking at GASB 103, there's a complete example of an MD&A within that statement. So especially when you're going to be implementing, that's absolutely a great place to go look and get an example. A lot of governments also put their financial statements out on their websites, so you can look at other municipalities near you and see if you can utilize some of that as far as structuring it. Brian, any other thoughts on that one?
Yeah, I agree with you 100%. If you're looking this year to make your first MD&A and you're not ready for GASB 103, you can go back to GASB 34. GASB 34 has a very good MD&A example in it. And I 100% agree with Anna. When I'm writing a new MD&A, I've changed towns a few times over my career. And when I've done that and written a new MD&A, I usually take 2 or 3 or 4 MD&As from towns that I know do a good job, and look at those, and I kind of mash everything together into one that I think is the best, a Frankenstein version of those 3 or 4. So I think those are great places to start. And there's plenty of people involved in IGFOA who'd be willing to help you out, and give you some tips and pointers as well.
Yep, absolutely. It does look like that's the last of the questions that I can see. So with that, just want to say thank you. And also make sure that you're tuning in on May 14th for our next Yellowbook session. It's going to be session 4, and it's going to cover GASB update part 2, which I think is going to dive a little bit more into GASB 103 as well as GASB 104. So thanks everyone for joining us today, and I hope you have a great rest of your day.